Hello, everyone. Welcome to P-Bolic Notes. My name is Michael Crichton, and today is Tuesday, September 27, 2022. Welcome to my channel. I'd like to share with you my thoughts on what I'm seeing right now in our investment space, and as well how things have been very bearish, as we all know, in the last little while. And it looks like things are still a bit challenging with inflation, with the CPI, and so forth. And I'll share with you what I'm seeing right now. I'll keep the video very brief today, and then afterwards we can basically take a look at it maybe a week from today to see if anything has changed for the better. Of course, before I get started, quick disclaimer: this is not financial advice. I'm just sharing with you what I'm doing as a retail investor in this space, and so always, of course, do your own research. So let's get started with me showing and seeing what I'm seeing with the inflation rates. Obviously, the first thing is this is the CPI with in the United States, and what's going on with the CPI in the US. Obviously, it's very challenging with the inflation rate being over 8% in the US. And what I did was, in comparison, since Canada really follows the United States with the CPI and with the interest rates, because Bank of Canada really wants to make sure that our currency doesn't get let's say devalued versus the US dollar, so they will really follow the US dollar closely, or I should say more the interest rates closely than the US dollar. So this is our CPI in Canada. The source for this one is StatsCan. StatsCan has a great website with all kinds of data, so you can obviously help yourselves and go check out their website. So what I did was, over there, I went all the way back to 1914, and if you look at where the interest rates got up really on the high, it looks like we got to somewhere in the range of approximately, it looks like plus or minus 7%, and now hopefully it's on its way back down. But it looks like on over here it was all the way up to 7.73%. And the last three times it did this, it's done this three times really, or going back over 100 years. The first time was right over here in 1916. The second time was right over here. So obviously this was right during the First War. The second time that they did this was right over here after the Second War, around 1947. Obviously there was massive inflation with the Second War happening, and people had to go back to work, and the soldiers came back and had to go back to work and reproduce goods. So that created massive inflation. So that was also another time that CPI in Canada was at the same level that we're at now. And then the last time was right over here in 1970s. So obviously we know in the early 70s, 1971, the United States with their president, Richard Nixon, they went off the gold standards, and then that obviously had an impact with inflation and so forth in the United States. And obviously Canada followed as well, because Canada is so closely linked with the US. And so that's why the 70s also were an interesting time. So what does this all mean to us right now with the current market? Well, obviously, if you look at what's going on with Bitcoin seems to be really it's definitely in a massive bear cycle right now. We are right over here at the 300 week moving average. So 300 week moving average is a very long moving average. This means that this is going back 6 years of moving average, and we're kind of like right now hovering around there. So obviously this is a very bearish situation, especially when we know, late last year we were hovering at over $60,000 US. And if I look at what's going on with Ethereum, of course, Ethereum is also having a bear cycle, even though there was the ETH merge and so forth. And ETH went on a bull run since June, but right now it looks like it's hovering at basically it's a 200 week moving average, which is right over here. I'll put this at different colors so we can see it better. So obviously this is also ETH as well is very bearish. And I see over here, if I look at the chart pattern, we see here that it looks like it may be doing a double top formation, and it looks like it broke, but it hasn't broken yet, but we're going to have to pay close attention to this. If it does break, this is very bearish, because we see the second top is lower than the first one. So we're going to pay attention to this with volume as well to see if it does break or not. If it does break, the next point that is for Ethereum, is an important point, would be something in the range of over here, which was a high in 2018. So that would put us around, really, that would be a very massive drop for ETH potentially. So let's pay attention to this to see how this plays out. And the ETH Bitcoin valuation doesn't give me much right now. I'm looking at this and we're still seeing that the ETH Bitcoin valuation is still hovering in this. It's been in this corridor since April last year. So it's been up and down, really going from 0.058 all the way up to here. And it's even though the pattern looks like it's on its way down now, ETH versus Bitcoin, but it hasn't really been doing much. It's been kind of this behavior for the last little while. On the macro stuff, the DXY, as we know, a couple of videos back, we did the DXY. DXY has been on this very aggressive bull run. Obviously, it's been clobbering all the asset classes, especially the risk-on asset classes like Bitcoin, ETH, and Nasdaq. So the US dollar gaining strength is not great for these kind of assets, the risk-on assets. And of course, the S&P and the Nasdaq, they're both as well showing very weak behavior. So the S&P has been in this negative corridor. It definitely looks like it's in this bearish trend. And if I look at what's going on with the Nasdaq as well, the Nasdaq also is very similar to the S&P. It's kind of doing this same corridor as well, that it's been basically bouncing up and down this range. So for if I look at also the 10-year treasuries, I like to look at that because I like paying attention to the 10-year treasuries because it does indicate to us where how the Fed is thinking in the US and how the bond market is. The 10-year treasuries are at 3.94%, and versus doing the 2-year treasuries, which is right over here, we're going to see that the 2-year treasuries also have been, last time I checked, these were inverted. So I'm very curious to know if it's still inverted or if that's really moved back. Inverted means that basically that the 2-year treasuries would be at, or the 2-year bonds would have an interest rate that would be higher than the 10-year bonds, and we see that. So you see that the 10-year bonds are at 3.94, while the 2-year bonds are at 4.28. So these are very negative signs, meaning that the bond market is encouraging people to for a short term invest in short-term bonds instead of buying risk-on assets. So all in all, to conclude, our situation right now is very bearish, and whoever is trading out there, which I don't trade, I just do investments really for the long term. Whoever is trading out there, be careful and just make sure that you are playing the ups and downs properly. And for the long-term investors like myself, I'm not sure if we're at the bottom and so forth. So meaning that personally, I am just watching the space very carefully because I am not exactly sure how things are going to play out from here. So thanks so much for watching. If you like this kind of analysis, please just subscribe. If you have any comments, send it my way as well, and I'll do my best to answer them. Thanks so much for watching, everyone. Bye-bye.